Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for Friday, the weekend edition of what I normally do. And this is April 20th, 2018. The markets have already settled, and you've got all the S's by the prices. The events of the day, obviously, in fact, the event of the week has been rising interest rates, which we have seen in the bond and the note market. The 10-year note is now at around 296. That 3% number scares people. It's a lot of yield. Remember, the 2 years coming up too, and it competes with the stock market. If you can get 2.5%, 3% on your money, just think about that, especially on a 2-year note. And I'm not saying you're getting 3% yet, but certainly around 2.5%. Yeah, people start saying, you know, no risk. The market's been old. I don't know. Those are the things you watch. The dollar got extremely strong. Metals held up actually pretty well for the day today, considering that the dollar took off. Now, before I get going in all this, I'm going to be holding my live webinar again this coming week. And in it, I will take your questions. There'll be an invite. More about that in a minute. And yes, folks, it's free. But let's get to the charts and understand what's going on. First off, keep in the back of your mind on the crude, you had an OPEC meeting. OPEC is saying they're going to keep curtailing production. The Saudis are now talking they want $80 to $100 a barrel. They got into an arguing spat, at least the energy minister of Saudi Arabia with President Trump, because he's saying, all you're doing is curtailing. You're not letting the market find its price. He's right. Any way you cut it. If he wants, he can make U.S. oil a bit more competitive and cause the spread to go. How do you do that? We did see today that we added more rigs. I think we're up to 820 oil rigs. I think we added 5 this week. You can also release some more oil from the reserves that we have if you wanted to do that. I'm not saying he will. I'm just telling you things that can be done. When you look at a monthly chart of the S&P, you know, you haven't come back and hit an 18-month moving average of closes, just so you'll know, since 2016. At some point, this market's going to be ripe for it. Nothing stays over these averages forever. This has been one of the most phenomenal bull runs of my lifetime. And I am not saying it's over, but I am saying it has substantially been weakened. And it may have made a top of significant importance on January 29th, which if you watch my daily updates Monday through Thursday, you know I've been talking about. On the weekly area chart of closes, I'm going to call the market in an upthrust because since 25.97.75, this low right here, we've been able on the weekly basis to climb back from, let's call it mid-March through where we're at now, back up to this week's highs. Okay, but you're still under the 18-week moving average of closes, so I think you have a downside bias. When we look at a bar chart just by itself, it's pretty hard to argue that that break we saw at the beginning of this year, the high we made to this break low, we have just been constrained in trading within. We haven't gone back up to challenge the highs, nor have we gone down to challenge the lows again. When you look at the weekly chart, I had a downtrend until this week. Now I've got a higher high. This week's high took out the high of 26.79, and I still have a lower low. There is no trend. I define an uptrend as higher highs, higher lows. A downtrend is lower highs, lower lows, which you had up until this point. And then when you came up, right this week, you took that out. Now I have no trend. I look for resistance points by sometimes using one of two tools, moving averages or what's called a Bollinger Band. Now, a moving average is pretty simple. I use simple moving averages. They're not weighted in any manner. So I take the current number of the close, and I go back 17 weeks, and I get the 18-week moving average closes by adding it all together. I do the same for the 100-week and the 200-week. When the market is under this number, rallies back to it, I'm looking for resistance. When it's over it, I'm looking for support. And from this 18-week average, I say the market tries to develop its next trend. Another tool that a lot of chartists use besides moving averages are Bollinger Bands. Now, what a Bollinger Band is, an algorithm designed to keep the market trading within it 95% of the time. You want it to step out of that eventually. That's the other 5%. But you will often see that if you're trending, you try to stay over that. If it's in an uptrend, the 18-week average, it's not uncommon to keep hitting the upper Bollinger Band and stepping back. When you come down, admittedly, you slid through it, and then you popped right back and you have fought a battle. And you're still in that battle zone, trying to figure out what's the next move. And notice that it seems to be swinging around that 18-week average. If it drops hard, I will look again for the 25.65 level to be potential support. I then look at momentum, and I use what's called the oscillator slow stochastics to measure momentum. Momentum went flat this week, and I think you can pretty well see that. It was pointing down prior to this. You can see how prices were dropping with the momentum, and momentum often leads price. In this case, it went flat on us this week, so we're getting that choppiness in the market. When I go to the NASDAQ, look at the battleground. Look at the 18-week average. This market this week closed 66.76 and a quarter under the 18-week average. Therefore, I say that even though the swing line's got higher lows, higher highs, it gets countered because the bias of the market, since it closed under that 18-week average, is down and momentum is flat. I don't see anything there. In the Dow, you tell me the number the market rallied back up to and had the resistance. After the break, you can see, just like in the S&P, this is the battleground. What's it going to do next? Well, unlike the other markets, this still has lower highs, lower lows. Frankly, until you take out 25,510 on the current formation, I think the bears have more control of the market. They've got the lower highs, lower lows, a resistance point. Momentum was flat. I'll give them that. But that's about all that I could say. In the Russell 2000, I have a different pattern than we just saw. Admittedly, you have the lower highs and you had lower lows. But do you see what we've done over the past 3 weeks? We made higher lows, lower highs. I'm going to call that a neutral pattern. Momentum is pointing up and the bias is up. So this market has a better shot of support at the 18-week average than the other markets which have resistance at that number. In the VIX, you tell me the number the market is fighting the battle at. If you don't see the 18-week average, I don't know what to show you. Yes, from this sideways action, and you'll hear me say that consistently, you look for a move. Did I know it was going to 50? Not in your wildest dream. Did it last there? Not in your wildest reality point. It went up. It's one of those times of the market, let's call it, it was not a crash, it was a flash bang. Just the opposite. Took the market up, knocked people all out of the market, and within 2 weeks it was right back into the zone that it all started from. And now the question is, it's trying to set up a pattern of what? Well, I got lower highs, potentially higher lows. I do have those. I don't know what it's doing. It just seems to be stuck at the 18-week average. 10-year notes. Momentum is down. Bias is down. The last time, this last rally 3 weeks ago knocked the trend out, but it kept the bias in place, and the market is now at a new low. I'm going to look for support at 119.01, about 16 points lower, and see what that's like. In TLT, the ETF, you saw this rally develop here with the swing line, went right to the 18-day average, as I'm explaining here, and then began pulling back. If it's going to follow the other interest rate instruments, the question is, can it get down to this lower number? You see the resistance point, 121.19. Any close over that without taking out 118.11 can actually turn this market back to friendly. Take out 118.11, the market goes neutral because, don't get me wrong, you still have the bearish bias and the momentum down, but the swing line will be broken. In the dollar index, I wish I could tell you I'm surprised. Let's go back a week. Sideways action, lower highs. If the market rallies, momentum, I'm looking for the 18-day average as potential resistance. Guess what it did today for the week? Made the highest high, went to that 18-week average of closes. Did I say day? I meant 18-week. ran into the resistance, was unable even to close over it. I'm going to call the market now totally neutral. On the longer chart, the weekly chart, I don't see a trend in it. I see the flip-flop in the eurocurrency. If you take a look, the market fell back. It had an outside week down. The 18-week average is 122.992. We went to 122.990. So you went right to that number. You stopped today. I'm not the only person that looks at these numbers, but you got to start paying attention if you look at them. If the market takes out 122.76 and a quarter, right here, 76.50 rather, what happens if you can close under everything, you then have lower highs, lower lows. One of the things I've learned over my many years of trading is whenever I see an outside week, be it up or down, when it's down, you don't want to see that week's high taken out the following week or the week after. It could be a trap that has been laid by the bears. The opposite if you're bullish. Talk about all this in my webinar. Aussie dollar, lower highs, lower lows. I'm on TV a lot all over the world, actually. And when I'm on Sky Business, I've been saying, you know, and that's obviously in Australia, the one that I'm doing. I've been warning, I said, you know, this trade war with the U.S. from China cannot be good for their economy. The market's been working down ever since those talks began. Canadian dollar. Well, Canada's stuck now. All it did is rally back to this 18-week average, spent 1 week over it, right back under it. The trend, you have the swing line up, but you're unable to stay over that 18-week average. NAFTA, NAFTA, NAFTA. Think that. Is the market got an edge right here? Not really. It's sort of stuck in no man's land. And if you can think, look at how the market is just going sideways, spinning its wheels. In the Japanese yen, momentum is leading price down. Where would you expect, if prices continue lower, for prices to try to find some support? That's how you start looking at it. I'd be looking at the 18-week average at 92.51 to 91.65. What is the trend? There is none. You have a lower low and a higher high, momentum down, bias up. Market's not telling you a story. Bitcoin. If you've been watching this, I warned you. I said, as we get to the tax time, be careful. You've had a lot of selling of people owning Bitcoins that owe taxes. They might have been, I don't know that they did, but the logic is that tax selling had come into this vehicle that went up, started the year in December, actually. I said it wrong. This past December, trading at $20,000. Hit the futures, got itself down to nearly 6,000, so you're getting a bounce. Could this be a low? It could be. You don't know. The market could be right through here. We'll find out. I read today a report that tried to show a formula to figure the real valuation of Bitcoins out. It was $20. I then read another article this week, what it actually costs to mine Bitcoins. And it depends if you have a large farm to do so, in other words, big facility. Could be as low as $5,000 if you buy the computer with the integrated chips, right? And if you don't, you're just an average guy on the street doing it, it's probably $8,200 in electricity. And there's always a new vehicle coming out, it seems, in these cryptocurrencies with the twist. I just read one that is not going to use an algorithm to determine how many Bitcoins, a finite number. It's going to be more like a central bank issuing money back and forth. All kinds of weird things, and still lots of scams. Got to be careful. The ones on the futures markets, obviously, they're regulated. The others, you're on your own. In looking at the market here, you're over on the difference of the Brent versus WTI crude, staying strong. We had come down near the $3 mark, got up here. It's a pretty strong close this week at 540. I think that it's the idea that OPEC wants to control its oil, whereas we just keep producing more and the spread widens. But it gets wide enough where people step in and say, I can ship American oil at enough of a differential. I can buy it cheap enough even with shipping costs where it makes sense to buy it. You can see how the trend is staying up. Momentum is staying up in Brent. WTI, longer term, power in the momentum. Higher lows, higher highs, back into resistance where you fell once before from as well. And in nat gas, it looks to me like the market is trying to form something of a base, but you haven't turned momentum back up yet. Now, we were talking about my webinars. You should have received an invitation if you were going to get it. I sent them out the beginning of the week and Friday as well. If you didn't, you got to get hold of us. we'll be discussing charts that you bring in. You get a chance to ask questions of me during the webinar. Bring a symbol if I don't know it. It could be an ETF, anything. A chart's a chart. We'll try to answer it, put on the different studies that we do and how it works. Call us. If you didn't get that invite, look in your junk, your spam, everything. Hit it. It's at 1 p.m. Give us the call, by the way. It's at 1 p.m. on Tuesday, Central Daylight Time. Got it? Seating is obviously limited. I don't hold these for big crews where I can't control what it does, but I think you'll find it fun, candid, and very entertaining. I'm Ira Epstein. I hope to see you on Tuesday, and I'll see you all anyways come Monday. Have a great weekend.